Henry. Right now I'm currently trading Ripple. I'm currently long in a position here on Ripple. I'll come in here. So up here we have a 1 minute chart, and down here we have a 15-minute chart, just to show some range of what we're actually trading here. This is an S4 to R4 traverse. So this purple line that you're seeing here, this is R4. This line here is R3, and we can see the price action as Ripple bought through R3, broke out into R4. My signal to go long is if any currency pair price moves above R4 is my signal to go long. Down here on the 15-minute, we can see this is R3 and this is R4, and this is the move here on the 15-minute. This is where we are right here. And let's see, let's get a look at profit target if we can. So we'll see our profit target is right here. This is R6. This profit target, it's right here. Or actually, let me pull it up. See that. Are we 264? We'll drop this in. Drop this in here. That ought to put us, yep, right there. Okay. So give me a second. Let me get everything here into frame, and then I will break down my entry here, explain it exactly what I was seeing and what I was trying to do with it. Nope. Okay. All right. Okay. Let's come in here and take a look at this entry. Okay, so we have a breakout. Let's back up and we'll show the breakout. So we have the breakout in this area here where it initially broke out. This area down here, these bars, this is a volume indicator. This area down here in the blue, this is a relative strength index. So we broke out here in this area, pulled back, retested R4. Buyers are able to move the price above R4, retest R4, and then we have buying, and then we have this breakout candle. We have ignition volume right here, and then the relative strength index where we're oversold up here, or where we're bought up here, which is common when it happens when we make a big price move like this. So seeing this, this is looking, or this is in position for me to take a long trade when it's above R4. We can see it got some room up here. We have some consolidation here, likely some accumulation, and then we see that the price sells off. It tests right here. We have a test of R4 again. We found some support, some buyer support down here. So this was my signal to get in. Also, if we look at the relative strength index right here, this got my attention. This was a good place for an entry here, just because you're seeing here at the bottom of the range, the relative strength index is showing that it's this is a signal to buy when it is down here at the bottom of the range. You want to buy or you want to sell when it's at the top of the range. So if we go into the RSI here, you'll see that at the top we're overbought. We're overbought when we're up here. We're oversold when we're down here. So when we're oversold, that's when we want to buy. When we're overbought, that's when we want to make a sale, or we want to take a short sale. So, as I mentioned here, we're overbought. So I take an entry right here. This wicks down. I'm actually watching as I'm entering. I'm actually watching this area here, right here. Because once we get this contact right here, and also we can see we make the same contact right here. I like to see contact with the line or very close to it to give me an indication of the type of pullback, even though you can see that we're making contact with the but the lows are getting lower every time we're making contact down here, and then eventually we start making some room up here, or we start buying. It still throws in a wick down here, so anybody who had already set a stop here would already be stopped out if they were managing the risk properly. But we can see now we're moving from oversold, slowly moving back up into the overbought range. We're fading a little bit, but down here when we're oversold, basically this general area right here being oversold, I'm basically looking for entries in this general area. And then the goal would be to wait until I'm seeing buying pressure starting to move out of this overbought range. I've been working on, this is the first day that I'm working on this modification to my system. I've been working on getting better entries, tighter stops, and just general better entries. I find when I typically tend to get in is usually at a point of congestion or a lot of consolidation. A lot of the times I'm able to manage my risk well enough to handle it, but it's a lot more effort. Um, this particular adjustment that I'm making puts me basically where I would probably put my stop, or at least where I would be looking for a stop, is now where I'm looking for entries. So typically, let's say in this instance, I would be looking for a buy. I would be more focused on, let's say, a breakout. Like, let's say we have this level, this price level right here. That's set right here. So right now we have a breakout of this level right here. So typically traders will look for a breakout opportunity. So when the price action gets above here, gets above this level, they want to take an entry for a long here. The only issue with this is typically when a currency pair or any financial instrument has a breakout, there's going to be pullback, which is what we're seeing right now. So we've got this, we had this breakout, and now we're pulling back. So when you enter at a place like this for the breakout or potential breakout, because it still has to break out this level, still has to break out this level, this level, this level, and this level. So it would be a series of breakouts, but it has to start down here if it's going to start at all. So with that in mind, trying to take an entry down here before we get into, let's say, this zone, this area of where it's mostly going to be consolidated price action in here. Ideally, this is going to be accumulation. Buyers accumulating shares, preparing to move the price higher. This is what we want to see, but buying Ripple in this area, you'll be exposed to the consolidation. Some people call it chop. You'll be exposed to it, so it's easy to get stopped out, take a bunch of small losses, take a bunch of big losses, depending on how you trade. So right now I'm trading a smaller size. I'm only trading a $10 risk just to get a feel for my new entry strategy. So we'll see how this is going. So far, so good, and we'll see if we can break out into another range here. Experimenting with whether or not I want to trade or what hours I want to trade. It seems that the most volatility and volume comes in during the U.S. market hours. We're a few hours away from the U.S. market opening up. I have a habit of looking for opportunities at the edges of time frames and at the edges of ranges. So right now we are here at the edge of range R4, attempting to traverse to the other end of the range long to R6. So sometimes, or at least especially when it comes to trading and many other things, whether or not it's sports or whatever it is, positioning, making sure that you are in the right place at the right time so that you can do the right thing depending on what that is. So if you are playing a sport if you are out of position, you won't be able to accomplish whatever it is that you need to do. Same thing with trading. If you are not in the correct position, you won't be able to manage whatever it is that you're trying to do. So for example, this trade, if we were down here, let's say, if you were down here, this is R3. If I'm down here at R3 positionally, I would not take a long here at R3. I don't have a play in my playbook, the Camarilla pivot playbook. I didn't write it. It was already written. It's already used. A lot of algorithms use it. It's a thing that's already there. So I have to follow the rules that are established for it, or the norms that are established for it, unless I want things to be the opposite, and then I need to do that. So for example, R3. So if a currency pair is in this range, midway between R3 and R4, I'll look for a short. If it is under R3, just under R3, I'll look for a short, but nothing else. I won't go long anywhere in here. In this range, I won't go long. I'll only go short. And then just below here, I'll only go short. I won't go long here. But I will go short here. I will go short here. Now, price action moves above R4. Okay, all I'm gonna do is long. There's no way I'm gonna short this. Now, actually, I take that back. There is one way this could possibly be a short. So here, as I mentioned with R3, you want to go short. This mid-range here, you can, there'll be buyers here trying to keep the price up here above R3. So you're going to meet some resistance typically when you get to the pivot level. So taking an entry up here and up here, just below R4. So sometimes the price action, we can see it on this particular pair. So for example, we have a breakout here of R3. We test R4, fail, test R4. We buy through, consolidate a bit, okay, sell off. Okay, there is potential that here you want to go short here, but I'm not getting any indications that this is a short, so I'm not shorting it, not looking to short it there. But that would be an example of where you could possibly short at R4. But basically from R4 here, it's all shorts here. R3, it's all shorts here from this range down, and then R4, we're long when we're above R4. That'll give you some reference for trade theory or trade idea when executing at the cams, or at least these particular cam levels. Previously, I was using this area down here. I was using a momentum indicator. Now I've moved to a relative strength index. This has allowed me to make the change in entry strategy. If you look at a momentum indicator and you look at a relative strength index, if you put them side by side, actually I'll do that now. I'll add one in. And you can see that they pretty much will show you the same thing, but how you, or at least the way that it looks to the eye. Okay, right here. So this area here, this is a momentum indicator. This is showing whether or not buyers or sellers have momentum. You can see it does the same thing, except it's not showing, or what it's referencing is different, as far as in this is showing momentum, who has it, whether or not they're gaining or losing it. This is showing strength. Again, with momentum, you're seeing strength, but how I was using it is different. Typically, I would say, I don't know if there's to me, they're the same thing. But the way that I was using momentum was trying to take advantage of, or seeing if I could take advantage of momentum being in my favor. But I learned that, okay, when, let's say for this instance, buyers, okay, I'm looking to buy, I want to go long. When the buyers have momentum, of course, the price is in a good place for a buyer if you're already in my opinion. If you're not in, buying at a higher price would not be ideal. You want to buy at a lower price. So for me, if I'm going to buy, like in this case, like buying Ripple, I don't want to buy necessarily at a breakout like I explained earlier, like at this level, because you get these pullbacks or sell-offs. You only know when you're, or at least for me, I'm only going to know this because my stop fails, but my stop didn't fail right here. So this is still considered pullback to me. Just because we pull back to this level, we're still holding this level here. I'll pull my stop up so you can see this is my target up here. This is my stop right here. Actually, it looks like my target has already been hit this morning, so it's unlikely we're going to go back there. We may. Let's keep an eye out. Let's see how volume is looking. Actually, let's get this extra steady out of here. It's actually an extra relative strength index. I didn't put the momentum in there. So, all right. But yeah, some other time I'll pull up the, or I suppose I can do it now, since I pulled up the wrong, okay, momentum. That's what I want to see. Okay, now, okay, I can see what happened before. I was looking at them and I pulled up the wrong indicator because I'm like, these things are doing the same thing, but I'm starting to, or I can immediately see some divergence in signals. So I was using this momentum indicator here to take entries. So I would have taken an entry right here on my previous system, or at least how I was using my system previously to take an entry. I would take an entry somewhere up in here when the buyers took back momentum, trying to confirm that buyers were in control and had found support and were ready to potentially move the price higher. So not far off from what I'm already doing, but yeah, it would have been somewhere up in there. But we can see with this relative strength index, I'm able to identify a potential entry sooner. So instead of getting caught in this zone where there's going to be some consolidation, gives me the potential to be able to get in earlier. Also provides the potential to be stopped out earlier as well. So keeping an eye on this. And I'm still experimenting with these new entries. Again, while I'm doing much smaller size here. But I think I'm probably going to get stopped out. Actually, I'm going to exit this position. I don't think it's a good position. I think it's going to fail because we've already hit the target up here. Also, I'm debating whether or not, again, I mentioned the hours that I'm trading may focus more of my resources specifically for the U.S. market hours. But I'm going to take this one off, I believe. I'm still thinking. But I think I want to take it off. I'm just going to watch it here. Let me take this extra study off. Typically, if something already hit a target and doesn't want to hit it again, or if it does, it's likely to test, and there's at least some probability of it moving past that level. So yeah. Okay. I'm going to close this position. I think it's going to fail on me. It could take off and get going, but the fact that we've already made contact with the price level that I was looking for soon after the breakout, I don't know if it has it in it anymore. Also, we've already purchased at the right place, or at least the right place for my system, and we're struggling here to make any room. But yeah, all right. But hope any of this information may have been useful. We're moving up a bit. We'll see if we break out or what happens here. Actually, we're just gonna hold off. because we've been doing this, you can see from my entry that was here, we were able to break out with this level, sold off. This was pretty aggressive here. Let's see what the numbers are on that. $33. And then we have 35, 30, 24. Yeah. The only thing that I'm considering is whether or not the position is longer, whether or not it has the potential to break out above the previous high. I'm not particularly optimistic at this time. As we get a little closer to the open, maybe I might be more interested. And it also has me interested because it's holding this level here. Maybe take another entry here. Maybe. And I don't mind getting out of a trade because it just may not be the right idea. And you just get back in 264. Cents, 256.30. No. Risk to reward is just not there. There's a potential higher target, which is what had me debating on whether or not to do this. And then we can see here, this held the cam here finally. We can see here it whipped out, but then we actually held. Take another entry here. If this cam holds the price, because I'm seeing how it's testing the cam. How it tests this area, came below. Same thing here. think it may hold this cam. I'm going to take another entry here. Okay, much worse entry. And now it wants to fill the cam again. So right now it's back here at my original entry where I was thinking about getting out before. Took it here. A much worse entry. Looking like it was going to hold the cam. Definitely, I don't like this entry because I want to be entering in places like this, so this is a chase entry. This is the type of entry that I've been trying to avoid getting caught right at the tops of candles here. I'm actually going to move my stop right here. So right now, stop's lower, but I want to tighten this stop up. 704, 704. Okay, looks like we may be breaking out here. Holding on to that other entry obviously would have been better. So hopefully a lesson learned there. But I did extend my target range to a higher range, which to me would only make sense since we've already gotten to the established range. But this could take until the open of the US market to do anything at this rate. See if we have the strength to break out again. Looks like we may be breaking out over this level here. Okay, this may want to go. Pros and cons to changing up my order, but psychologically speaking, my stop is a lot tighter, so I'm not gonna. Normally, I would stress like, oh man, I had a really good entry. If I would have just left it there, I would have been fine, which is good. But based on the price action right here, obviously I don't have as good of a price as I did right here, since now I'm up here. But my stop is now right here instead of down here, and my entry being here. So as far as in risk to reward ratio, I'm still pretty much in the same boat. And if this fails this level here at the cam, I don't particularly trust it. Obviously this is, or at least buyer support here, but it's not a technical level from what I can see. So how much support is there remains to be seen. This may need the US Open to get going, as I mentioned, but it seems to be ticking along here. This one, sometimes the slow ones, or the slow ones to get going, once they get going, they really get going like they've been wound up. So maybe this is one of those types of currency pairs, or at least that type of price action today. We'll see. From a psychological perspective, exiting trades that are going in your direction. For me, at least, it seems counter to my nature. Like I want to hold. Part of me wants to hold and just let the trade work or not work. Once I commit the capital, just letting it go, not committing any capital, I'm not prepared to let go of. But at the same time, there's the concept of, let's say, good trading, to where you find yourself in a position or a situation trade-wise that may not fit your trade criteria or your rules, even though you may be in a favorable position, or if you are trying to, let's say, be more risk aware, and being more aware of, let's say, the smaller losses, or how losses may affect your performance. So for me, it's, or at least in this situation, managing your choices. So I understood, hey, this may be getting ready to go, this may not. I just don't. I'm not seeing the price action that I want to see, and then take the trade off, and then reevaluate. Would I take this trade right here, right now? I find that being in the moment, or being in a trade, blocks me mentally from being able to see the trade. You have a trade idea, you have a trade theory, you're executing it, you have money in the market to see if it will execute. So for me, if I'm in a position, I'm heavily biased towards that position. So to be able to take a position off, for me, psychologically frees up the currency pair to be reevaluated. If I'm in it long, it's always a long, no matter what happens. So right then, when I took that position off, I was hesitant to, because I was in a really good position. I knew I wouldn't get in a better position than that, and then I'm going to put myself in a position where I could be potentially chasing, but I'm able to get a tighter stop, and my risk to reward is still very good. So it's essentially, I think it might have been a 20-cent profit on that trade, or maybe a break even, and then right back in. So obviously I'd be up a little more right now, but in the big picture, it's not something to be concerned about. The main thing is, am I analyzing the currency pair well enough to make sound trade decisions? And then it's up to market participants to either actualize my trade theory, or disprove my trade theory. Alright, I'm gonna scan a few things and see if anything else is setting up or potentially looking interesting. Seems like things are selling off, which I can see why I was thinking about getting out of this one. Yeah. Alright, I'm not going to do it again, but the market's selling off. This could be independent and doing its own thing, but doesn't. The rest of the market is selling off. And if we look at the overall pattern here, we're putting in lower highs. Okay, I'm not a big fan. I believe I'm gonna take this off again and just wait until the U.S. market opens and reevaluate what tickers are doing here. Okay, I'm going to take this position off. I'm going to wait for the U.S. Open. A few things are setting up, or at least things seem to be setting up short. But if that's the case, this will fail. If not, if things are long, it'll turn around and give me another opportunity. Okay, thanks for checking out my trade and analysis, or my trade on Ripple, and my market analysis. But we're about an hour and 10 minutes away from the open of the U.S. market. Right now I am, or at least as things were setting up overnight, I was long bias coming into yesterday, and overnight I was a bit long bias. This morning my bias is shifting to be a bit short, but let's watch the technicals and do our best to trade what we see. But thanks for checking out my Ripple trade and market analysis this morning. See you next time.